Target is being sued, y'all. And believe it or not, it's really not even their fault. Y'all remember when Target launched their Pride collection? And a whole bunch of right-wing conservatives came out the woodworks, pulling up to the stores, actually destroying merchandise, physically assaulting Target workers, review bombing LGBTQ creators, leaving 1 stars on their products online so nobody would buy them. Well, somebody wants them to pay for the fact that they thought this was a bad investment. They said that Target only thought about diversity, equity, and inclusion, not the financial aspects. So in simple words, because Target didn't evaluate the risk of what diversity, equity, and inclusion could do, they got to pay millions. So what they trying to say is, you really just can't be nice and try to be inclusive of folks. You need to be worried about the risk that comes with it. The reason why this is dangerous for the rest of the world is because Target is a major retailer. That means that major retailers could be fear-mongered into believing that inclusion isn't a good idea, that there's something that could happen to them and that they could lose millions of dollars, if conservatives backlash. This means that retailers will always be at the hands of conservatives. If they could just throw a fit and embarrass people and harass people and cause physical violence, then they could punk you out of actually including people. So internet trolling really does have negative effects for marginalized communities. Because now Target can make an excuse for why they will never have another Pride collection. This means, those creators of those Pride collections, they don't get those dollars anymore.
Boy, oh boy, oh boy, oh boy, oh boy. We got some bad news for Target that is facing a whole lot of backlash, including a boycott for targeting kids with Pride paraphernalia in store. And this led to a huge conservative backlash, along with the conservative backlash against Bud Light / Anheuser-Busch for their woke marketing. And the numbers are in, right? The numbers are in regards to how bad Target was hurt by the conservative boycott, and we got to talk about it. But before we get into it, we have to have a word from the sponsor of this video, Noble Gold. The US dollar has lost 85% of its value since the 70s, when the dollar was decoupled from gold. And the government seems bent on continuing that tradition. From now and up until the next election, the government has free reign to print as much money as they want. And the last time that this happened, everybody knows, everybody remembers, inflation went up 9%. This means one thing: the security of your future and your family's future is all in your hands. Make sure you freeze the value of the wealth you're holding. Invest in gold with Noble Gold Investments. Gold is the one asset that is proven to withstand recession, inflation, and just about all economic threats. Noble Gold is here to help you if you want to invest in gold. You will also get a 24 karat, 1/4 ounce gold standard coin for free. Call Noble Gold Investments today at 877-646-5347 to get started, or go to noblegoldinvestments.com. That's noblegoldinvestments.com. And just remember, there's a risk with every investment, and there's no guarantee of any kind.
Target earnings just crossing the tape. Courtney Reagan is here with the numbers. Court.
Yeah, Melissa, so let's get through this. There's a lot here. Target second quarter earnings coming in at $1.80 per share. That's 41 cents above consensus, but the profit was not driven by sales. Revenue at $24.77 billion, below $25.16 billion estimated. Also slashing full-year earnings guidance. This even after this quarter's huge beat. So it's now expecting between $7 and $8. That's down from $7.75 to $8.75. It's also bringing down its sales expectations to mid-single-digit declines rather than low single-digit decline to low single-digit increase. Target's comparable sales down 5.4%. That is well below estimates for a 3.7% drop, also the first decrease since 2016. The retailer says discretionary categories again weak, while food, beverage, essentials, beauty, those frequency categories, those were stronger. Digital sales down 10.5%. That's the third straight quarter of declines and the worst performance since Target has been giving this number. Inventory fell 17%, and lower markdowns did help to lift gross margins. Operating margins also better than expected. But at 4.8%, that's about half of the level where it was 2 years ago at 9.8%. On a call with media, Target CEO Brian Cornell pointed to macro pressures, including inflation, for tempering sales, but also, quote, negative guest reaction to our Pride collection. He also continued to say negative reaction to our Pride assortment and added, after adjusting mid-quarter to address safety concerns, the business recovered steadily in July. I asked Cornell to clarify that the response by some consumers to the Pride merchandise was material enough that it impacted sales, but then after Target removed some of the merchandise or moved it in some stores, the trends changed. He said, quote, you describe it very accurately. We only took actions in the month of June. We wanted to make sure we're focused on the safety of our teams and the safety of our guests. Once we took those actions and addressed the situation, we certainly saw things normalize. Now, the last time Target's comp sales were negative, as I mentioned, was 6 years ago, and that does correspond to the 4 quarters that followed the retailer's stance allowing guests to use whatever bathroom they choose for their gender identity. Though Target did say at the time that any lost sales from those boycotts weren't material enough to report. This time, though, they're calling it out, just not quantifying it. It's just, again, seemingly caught in the middle of these culture wars in a way that did seem to impact sales.
Yeah, so you seen that, you heard that. So it seems that conservative boycotts do work. Okay, we have 2 prime examples of it working. Anheuser-Busch and Target. Now, we're going to go over some of the numbers here that clearly show that there's an impact. But, of course, Target's Pride merchandise leads to sales slump. Okay, so, again, we know why this is happening is because they were selling Pride gear, right? Pride gear for kids, which a lot of people did not appreciate, and that basically caused Target to flop. Target experienced a sale downturn in the second quarter amid ongoing consumer backlash from the retailer's Pride and transgender merchandise. Comparable sales slipped 5.4%, while the $24.8 billion in total revenue was 4.9% lower than last year. Negative reaction to Target's Pride collection had a material impact on sales, Target CEO Brian Cornell said on a call with reporters. As we navigate an ever-changing operating and social environment, we are applying what we learned, he added. Well, I mean, what they should have learned is that, hey, maybe you should not be pushing this stuff on children, okay? Who knows, okay? But regardless, some people may say, well, 5% is not that much. Well, it kind of is a lot, okay, when you're talking about retail, okay? A lot of these companies, you know, their margins are thin. So when you have a sales drop of 5% or something like that, like, yeah, that's kind of a big deal, okay? It's a huge deal. It's so big that it was worth mentioning in the earnings call that, hey, you know, this is part of the reason why our sales have dropped. Last month, Target confirmed adjustments to the Pride merchandising plans were underway after Fox News Digital learned it rolled back displays at some of its locations. Backlash to merchandise, including tuck-friendly swimsuits, forced the company to move items from the front of their locations. Following the rollout, Target's market value has fallen to $57.7 billion from $74 billion. After Target removed some items in June, Cornell said it, quote, saw things normalize, but the retailer will continue to have a collection for Pride Month and other heritage months. Yeah, so clearly they haven't learned anything. But maybe, just maybe, their new Pride, they're not pushing on children. Who knows? Target now expects annual comparable sales to decline in the mid-single-digit range compared to its prior forecast of low single-digit decline to a low single-digit increase. The retailer also said it expects 2023 adjusted profit per share between $7 to $8 compared from the prior range of 7.75 to 8.75. Target, which largely sells non-essential items like electronics and home decor, has been trying to balance its merchandise by adding more daily use products as consumers limit their spending to necessary items amid rising prices. Inventory fell 17% in the second quarter with a 25% drop in discretionary items in its stock, Target said. Okay, so yeah, Target here is definitely suffering from the boycott, okay, and some of the backlash. And it doesn't just end there, right? As they also got hit with a lawsuit, a shareholder lawsuit, after damage to the brand after the Pride collection was launched. Okay, so because of the backlash, they're now getting sued because shareholders feel like they've been thrown under the bus because of the decisions that have been made by the executives at this company. Let's read this. American First Legal on Tuesday filed a shareholder lawsuit against Target in response to the retailer's Pride merchandise that resulted in significant backlash, boycotts, and a drop in stock price. Yeah, so we all know what happened, right? They put out this Pride merchandise and people got upset, okay? And they started targeting Target, right, with a boycott. And that caused them to lose billions of dollars. And now they're being sued. AFL, along with co-counsel Boyd & Gray, PLLC, and Lawson Hunt Gonzalez, PLLC, filed a lawsuit against Target and its board of directors on behalf of Brian Craig, a Target shareholder, for, quote, betraying Target's customers and shareholders with misleading representations about its environmental, social, and governance and diversity, equity, and inclusion mandates, and for causing Target shareholders to lose billions of dollars. AFL indicated that Target's 2022 and 2023 proxy statements assured shareholders and investors that the board was monitoring for social and political issues and risks arising from the company's ESG and DEI mandates. Quote, however, management only cared whether its leftist stakeholders were satisfied, disregarding the possibility that its customers and shareholders might feel differently. Thus, in May 2023, Target embraced the radical woke agenda with its children and family themed Pride marketing and sales campaign. The corporation's infamous Pride collection included clothing for young children. This predictably caused more than a $12 billion collapse in share value, the largest stock price decline in over 20 years, the group wrote when announcing the suit. Yeah, I mean, again, I'll be pissed too, right? If I had shares of Target stock, I would be pissed too for executives making this type of decision, right? A decision similar to Anheuser-Busch, who at this point should fire their CEO, okay, because clearly that guy's in over his head in regards to how to recover the brand. Quote, Target's management has misled investors, ensuring them that the corporation oversees social and political issues and risks to protect shareholders when behind closed doors it works for its extremist hard-left stakeholders at the expense of its customers and shareholders, AFL continued. Quote, for far too long, large corporations have recklessly pandered to the left and bent the knee to serve the woke elites. Today, however, American First Legal says enough is enough. Since mid-May, when the controversy hit Target's market value, the company has lost over $15 billion at one point. In June, Bank of America lowered its price objective from $180 to $145, while saying the reduction is a response to weakened peer multiples, decelerating traffic, and modest mobile app engagement. As of Wednesday morning, shares of Target were trading at $130. Wow, that's pretty bad, right? That's pretty bad. AFL, a group led by senior members of the Trump administration, including senior advisor Stephen Miller, who serves as president, says it is dedicated to defending Americans from unconstitutional executive overreach, corporations that restrict free speech, and anyone who violates the civil rights of citizens. Quote, federal law requires publicly traded corporations to provide certain information to shareholders in their proxy statements that allow those shareholders to make informed decisions, AFL Vice President and General Counsel Gene Hamilton said. As alleged in our complaint, Target failed to execute its duty to its shareholders by making statements that led them to believe that political and social risks were being assessed, when in reality, the only thing Target's board and management cared about was how effectively they fueled the desires of various metrics advanced by left-wing stakeholders. Hamilton continued. In doing so, they caused our client to lose a substantial amount of money, and we will vindicate his rights in federal court. Yeah, so, yeah, I mean, look. Target's being sued. Their sales have dropped. Their stock price has dropped. And again, this is what happens when you go woke. You go broke, right? For those people who saying that, oh, go woke, go broke is not a thing, it's a myth. Nah, I don't think it's a myth, right? I think that it's harder to make some companies go broke than others, right? But as you can see, companies that have a significant conservative base of people who shop or patronize their businesses, if they experience a conservative boycott, a go woke, go broke boycott, yeah, they will, go broke, right? Just like Target and Bud Light. So, hey, let me know what you guys think. Make sure you like, comment, and subscribe. Most importantly, share a Black conservative perspective. Peace.